The media has finally been talking about gold. And the frustrating part about it is they have no idea why it's going up. And the funny part is how they try to attribute it to everything other than the actual problem, because they don't want to have to admit that gold at 4,000 is not a good sign, right? Because they want to pretend that everything is great, especially the Republicans, especially if you watch Fox or, watch Larry Kudlow's show, right? Because they think the economy is booming, nothing could be better, giving it all credit to Donald Trump, right? So there's nothing to worry about. Inflation is gone. We have the hottest economy in the world. The U.S. is the strongest economy in the world. But gold at 4,000. It's right. If all these good things are happening, why is gold flashing this warning sign? And so they're trying to dismiss what's happening by saying, well, it's not really a warning. I thought one of the funniest explanations that the Kudlow crew came up with was that it was Europeans that are buying because they're worried about their economies. They're worried about inflation. So they're the ones that are hedging, right? But of course, gold is going up in dollars too. It's not just going up in euros. We have an inflation problem. They just don't want to admit that. The United States has a credibility problem. The world no longer has confidence in our ability to pay our debts without it creating massive inflation. And Trump is one of the reasons that the world is losing confidence in us, because he signed on to the big, beautiful bill, which took the Biden deficits and made them worse. And he's the one that is beating the Fed up about cutting interest rates, slashing interest rates, firing FOMC members, sticking his own people in there, taking over the Fed. This is challenging the idea that the Fed is independent. And this is scaring our creditors. And, the media is also trying to pretend. I heard some people talking about how, investors have been driving this, retail investors. No, they're not. I know for a fact this has got nothing to do with retail investors. The retail business has been slow. It's picked up a little bit over the last few weeks, but it's still slow. And it's not just at Schiff Gold. The retail public is just getting in on this trade. Investors are finally being told by their Main Street, Wall Street firms to include gold in their portfolios. They haven't been responsible for the run-up. So gold has gone from 2,000 to 4,000 with very little private investor participation. It's all been driven by global central banks. And global central banks aren't anywhere near finished buying. They are ongoing buyers. They have so many dollars to divest, and they've got to buy gold. So now the investing public is just joining. So the upward pressure on gold is going to intensify. But on silver, because the central banks were never even part of the silver story, that's why silver took so long to move. Silver now is being bought, I believe, by retail investors or some institutions that now realized how cheap it was, but it's still cheap. Right? I think anything below 100 still is cheap. So $50 silver is still cheap. I mean, because $50 is what some people paid for silver in 1980. There's not that many things that you could buy that are at the same price they were in 1980. So silver is a bargain. And so even though the media is now focusing on gold and silver, I don't think that that's some kind of time to sell, cash out, everybody is buying. In fact, I think the gold story is going to die for a while until it's 5,000. And then once gold hits 5,000, they may start talking about it again. But it'll probably drift away from the headlines, and the media will just go back to covering other things, in particular Bitcoin. But one of the other things that really bothers me about the coverage, every time I saw somebody on financial news mention the price of gold, talk about gold, they also interjected Bitcoin. Like the two are the same. You can't talk about gold without talking about Bitcoin as if the two have anything in common. They have nothing in common. But the Bitcoin promoters want people to believe that Bitcoin is digital gold. That's the whole story that they're trying to sell, right? That's the meme, right? It's all BS, but the media, the financial media has bought into that hook, line, and sinker. So they keep talking about Bitcoin and gold as if they're the same thing. And it doesn't even occur to them that they don't trade at all with any correlation. And that's why you're seeing Bitcoin tanking today on a day that gold and silver are hitting record highs and closing at record highs. Bitcoin is going in the other direction. If Bitcoin was digital gold, it would be rising with gold. In fact, it's supposed to be rising more than gold. It's supposed to be gold on steroids, gold 2.0. Instead, it's not, right? Bitcoin is going down just like the NASDAQ. Now, also, oil was down quite a bit today, and it actually closed below $59 a barrel, which is also, I think, a reflection of the acceleration in the trade war and also some, peace negotiations going on that may have taken a risk premium out of the oil market. I think oil is ridiculously cheap. I think it's going to reverse. But in the meantime, these low oil prices are even lower in terms of gold. This is fantastic news for these gold mining stocks. So I do think that when the price of gold rises sharply next week, if it rises sharply, there's a strong likelihood that that's going to happen, I think a lot of the people who sold their gold stocks and silver stocks are going to rush to buy them back. Problem is, there's not going to be a lot of sellers, and the prices could really explode to catch up to the move in the metal that has already taken place. The U.S. dollar also had a pretty good decline, I think 70 basis points in the dollar index today, but it still managed to close positive on the week, which is interesting because the entire time that gold and silver were rallying strong, the dollar was also going up. The dollar didn't fall until today. And if today is the beginning of a reversal of that short-term trend, and if you remember, when Trump first, announced Liberation Day, the dollar tanked. This is kind of Liberation Day light, or just kind of an escalation or a new phase of the tariffs, because now, he's really getting tough on China. Maybe this will be the beginning of another big drop in the dollar. And if that happens, I believe that gold and silver will be even stronger, because if gold and silver were able to rise against a rising dollar and rise strongly. We had big up weeks today in both gold and silver, despite the fact that the dollar index rose on the week. Even with today's sharp decline, the dollar index was still up on the week. But if gold and silver could be this strong in the face of a stronger dollar, stronger against foreign currencies, imagine how much stronger gold's going to be when the dollar is weakening, because that is the environment where gold typically shines, not with a dollar that's rising against the euro or the yen or the pound, but a dollar that's falling against those currencies. And we could have that combination next week.
It's funny. For years, the mainstream financial media treated gold like a crank topic, something only doom and gloom types like me talked about. And now, finally, they're talking about it. But the moment they do, they prove they still don't understand it. Because every time gold breaks a record, instead of asking why, they scramble to make up a story that doesn't involve the one thing they refuse to admit, that gold going to $4,000 is a giant red flashing warning light that something's wrong. You turn on Fox Business or CNBC, and they'll say, oh, it's just Europeans buying because they're worried about their economies. Really? Then why is gold going up in dollars too? Why are we at record highs across every major currency? If this were just a Eurozone problem, gold priced in US dollars wouldn't be moving like this. It's not Europeans hedging, it's the world losing faith in American fiscal sanity. But of course, the media can't say that, especially the Republican-friendly outlets. They've got to pretend everything's great because Donald Trump is back in the White House. Hottest economy in the world, they say. Inflation's over, markets booming, jobs strong. Well, if all that were true, explain to me why gold is up 100% in 12 months. Explain why central banks, actual central banks, are buying record amounts of it. You can't have a booming economy, strong dollar, and stable inflation all at once and gold doubling. Something doesn't fit, and the thing that doesn't fit is the narrative. The truth is, gold is going up because the world sees the same thing I do. The United States has a credibility problem. We are the most indebted nation in history, running trillion-dollar deficits during what's supposed to be good times. Our interest payments alone are nearly $1 trillion a year, and we're funding that by issuing new debt that no one really wants. The only reason we're not Greece yet is because the dollar is still the reserve currency. But that privilege is slipping away, fast. And one of the biggest reasons for that loss of confidence Donald Trump himself. Now, don't get me wrong. I'm not saying Biden was any better. Biden blew out the deficit, expanded welfare, and fueled inflation. But Trump took Biden's recklessness and doubled down on it. The big, beautiful bill he just signed turned trillion-dollar deficits into multi-trillion-dollar ones. And on top of that, he's attacking the Fed, demanding rate cuts, threatening to fire FOMC members, and basically promising to take control of monetary policy. That's not confidence-inspiring. That's terrifying. When foreign creditors, China, Japan, the Gulf states, see that the supposedly independent Federal Reserve is about to become an arm of the White House, they start asking themselves, why would we keep holding U.S. treasuries? And the answer is they won't. They'll sell dollars and buy gold. And that's exactly what's happening. What's hilarious is how the media is trying to spin it. Oh, it's retail investors, they say. Grandma's buying gold again? No, she's not. The retail business has been quiet for months. I know because I see the numbers at Schiff Gold. This rally isn't mom and pop. It's central banks. Global central banks have been dumping US dollars and loading up on gold for the last 2 years. China, Russia, Turkey, India, Poland, Singapore, they're all at record levels. And here's the kicker. They're not done yet. They've only just started. So when you see gold going from $2,000 to $4,000 without much retail participation, that should scare you. Because when the public finally wakes up and joins the party, the real parabolic move begins. And that's where silver comes in. Silver's like gold's younger brother, the one that always shows up late but makes the loudest entrance. The central banks never touch silver, which is why it's lagged. But now the retail investors are catching on. They're realizing that $50 silver is still absurdly cheap. Think about it. People were paying $50 for silver back in 1980. You can't buy a hamburger for what it cost in 1980. You can't buy a car, a house, a Coke, but you can still buy silver for the same price? That's not normal. That's opportunity. If silver were priced at its inflation-adjusted 1980 level, it would be $250 an ounce right now. Even at $100, it's still a bargain. And when gold's move finally bleeds into silver, which it always does, you're going to see a surge that makes this gold rally look tame. Now, here's the funny part. Every time gold rallies, the media has to bring up Bitcoin. It's like they're contractually obligated to say the word Bitcoin every time they mention gold. You'll see headlines like, "Gold hits record highs, but is Bitcoin the new digital gold?" Number, it's not, and it never was.
There was a lot of concern the prior day that silver would not get above 50 because the silver stocks actually were weak on Wednesday because I think traders were expecting a decline. And then when we got the huge gap up on Thursday, all those silver and gold stocks gapped way up. But then we got the sell-off from the higher level, and gold and silver stocks had one of their worst days of the year, maybe of the bull market. Silver stocks in particular, on a day that silver traded above 51 for the first time and closed above 49. It was still a strong positive close, just not above 50. You had a lot of silver stocks down, 5 to 8%. So they got clobbered. And again, that just shows you how nervous investors are and how quickly they run for the exits on any sign that, oh no, maybe there's a top, maybe there's going to be a correction. So far, nothing indicates to me that that is the case, especially considering the fact that silver recovered and closed really, I think, above $50 on the week. This is the highest daily close ever for silver. It's the highest weekly close ever for silver. I think the same for gold. This is the highest gold has ever closed a week. In fact, it's never closed above 4,000. And now it's closed a week above 4,000, not just the day. And the gold stocks were actually down a bit, most of them. The GDX was down about 2.5% on the week, although the GDXJ managed to eke out a small gain on the week. But all of this was the result of the big drop that we had on Thursday. Now, you would have thought that maybe the gold and silver stocks would have recovered some of that drop today, but I think the overall carnage in the stock market prevented that from happening. The Dow had one of its worst days of the year, down about 880 points or so, 878 points. That was almost a 2% decline on the day. The Dow down 2.5% now on the week. The S&P, though, was down 2.7% today. Russell 2000 down 3%. Big down. The NASDAQ was down about 3.5% on the day, 2.5% on the week. In fact, the NASDAQ hit a new all-time record high today on the same day that it was down 3.5%. That is an outside reversal day. The NASDAQ took out yesterday's high and then not only took out yesterday's low, but closed below yesterday's low. And in fact, it did the same thing on a weekly chart. The NASDAQ took out the high from the prior week and then closed below the low from the prior week. So that is a bad sign for the NASDAQ that a bigger decline is coming. The catalyst for this decline was Trump getting tough on China. Earlier in the day, he posted on Truth Social that he was going to impose some serious tariffs on China in addition to the tariffs we already have. I guess he was preparing to get medieval on China, but we didn't even know the extent until after the close. And probably, I don't know, about a half hour or so after the U.S. stock market closed, Trump revealed that the new tariffs on China are another 100% in excess of the tariffs that are already in effect.
Now, let's be honest. The mainstream financial establishment is still in denial. They're pretending this gold rally is just a blip, a technical move, maybe a safe haven flow from Europe. But the truth is, the gold price is exposing the biggest lie in modern economics, the idea that debt and prosperity are the same thing. For the last 20 years, both parties, Republicans and Democrats, have been borrowing and spending like drunken sailors. The only difference is who they blame for the hangover. Biden blamed Trump, Trump blamed Biden, but both kept ordering rounds on the taxpayers' tab, and now the bill's coming due. The national debt isn't $36 trillion because we invested in the future. It's $36 trillion because we bribed ourselves with fake prosperity. Low rates, free money, endless stimulus, it's all a mirage. And gold is exposing that mirage. When gold was $1,200 an ounce, everyone said, see? Inflation's under control. The Fed's doing great. Now gold's at $4,000, and those same people are saying, don't worry, it's just foreign buyers. No, it's not. It's reality catching up. Gold doesn't rise because people suddenly discover shiny metal. It rises because trust falls. And trust is falling faster than the Fed can print excuses. Let me tell you something else the media won't. This move isn't retail-driven yet. The public isn't in gold. They're still glued to their Bitcoin wallets and Robinhood apps, chasing AI stocks like it's 1999. They haven't even looked at the metals. That means this isn't a bubble. It's the foundation of one. When the average investor finally gets the memo, when CNBC starts running, "Should you buy gold?" segments, then you'll know the mania phase has begun. But we're not there yet. We're in the smart money phase. Central banks, institutions, and a handful of contrarians are getting positioned. The same thing happened in the 1970s. Gold spent years climbing quietly while the media laughed it off. Then in the late 70s, when inflation and geopolitics collided, it went from $200 to $850 in 2 years. And the people who'd been stacking quietly were suddenly called geniuses. History doesn't repeat, but it rhymes with the same melody. This time, though, it's bigger. Because in the 1970s, the US debt to GDP ratio was 30%. Today, it's 120%. In the 70s, the Fed had room to raise rates without bankrupting the Treasury. Today, if they raise rates too far, they trigger a debt crisis. That's why I keep saying we're trapped. The Fed can't fix this. If they raise rates, they break the system. If they cut rates, they accelerate inflation. Either way, gold wins. And while everyone's focused on gold, silver's the wild card. I've said before, silver is not just a monetary metal anymore. It's an industrial one. It's essential to solar panels, electric vehicles, electronics, medicine, AI servers, you name it. That means the next silver shortage won't just be caused by investors. It'll be caused by industry. We're already running annual deficits in physical silver supply. Mining and recycling can't keep up. And when that hits critical mass, prices won't climb. They'll spike. You want a crazy stat? In 2020, total silver demand hit 1.05 billion ounces. Global mine supply, about 830 million. That's a 220 million ounce gap, and it's getting wider. So when I say $50 silver is cheap, I'm not being dramatic. I'm being mathematical. Now let's zoom out to the geopolitical angle, because what's happening isn't just economic, it's monetary war. The BRICS nations, Brazil, Russia, India, China, South Africa, have been quietly building a gold-based trade settlement system. They're sick of the dollar's weaponization. Every time Washington sanctions another country, the world gets another reason to de-dollarize. And the easiest way to do that is to accumulate gold. That's why central bank gold buying hit its highest level in 55 years last quarter. They're not doing that for fun. They're doing it because they see the end of dollar hegemony. And when the dollar loses its reserve status, Americans will learn what the rest of the world already knows. Inflation isn't a glitch, it's a feature. That's when you'll wish you owned something real. Look, this isn't me being a doomsayer. This is me being a realist. When your government is borrowing $1 trillion every 100 days, and your central bank is pretending that's sustainable, you don't need a PhD to see how this story ends. And yet people still ask, Peter, isn't gold already expensive? Expensive compared to what? The dollar? The dollar's purchasing power has collapsed 99% since 1913. In 1971, when Nixon took us off the gold standard, gold was $35. Today, it's $4,000. The dollar has lost 98% of its value since then. So tell me, which one's expensive? The metal that held its value or the paper that didn't? You don't buy gold because it makes you rich. You buy gold because it keeps you from becoming poor. And if you're still not convinced, here's the irony. Gold isn't even the best performing metal right now. Silver's about to take that crown. I expect silver to outperform gold 2-to-1 once this next phase starts. We could easily see $100, even $150 an ounce before the cycle ends. And when that happens, everyone who mocked precious metals for a decade will be scrambling to buy. So let me leave you with this. The financial media will always find a way to explain away gold. They'll say it's Europe, or tariffs, or hedging. What they'll never say is that gold is the truth serum of monetary policy. It exposes the lies. Every time gold hits a new high, it's the market voting no confidence in fiat money, and that vote's getting louder. So while the talking heads debate whether Bitcoin is digital gold or whether the Fed can engineer a soft landing, I'll keep stacking the real thing, the metal that's never defaulted, never gone bankrupt, never needed a bailout. Gold doesn't need to be explained. It just needs to be owned. And if the last few months have taught you anything, it's this. The people who laughed at gold will soon be the ones asking where to buy it.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.